Finally, the Modi government has acknowledged the futility of trying to pump prime India's GDP by, ever escalating, ever increasing government expenditure, which incidentally increased by a very astonishing double-digit compounded annual growth rate CAGR over 6 years of very, what can I call, lackluster, impotent sort of growth. Remember, Indian governments are very limited because they drive only 10% of our economy. And of course, what's worse is that they do this quite inefficiently and quite bluntly. Finally, the Modi government has also acknowledged that the budget presented on the 5th of July 2019 was in retrospect, a failed document. Finally, it has realized that India's private enterprise is the most potent engine of economic growth. It accounts for over 90% of our GDP. And finally, after 6 excruciating years, it has shed its "I am the government and I can fix everything" stance. Instead, it has adopted the mantra of "I will free your animal spirits, I will empower you, I will trust you, I will enrich you." Finally. Well, the fiscal giveaway is quite an awe-inspiring 0.6% plus of the GDP in absolute numbers. It's a very generous rupees 1.45 lakh crore of additional cash created on companies' balance sheets. Now, optically, it's a very large, it's almost a humongous 10 percentage points. I'll repeat that, 10 percentage points hack of the corporate tax rate in one swing of the axe. And this is quite reminiscent of who? P. Chidambaram's audacious move in what was called the dream budget of 1997-98. And ouch, this one is going to hurt the Modi government, a P. Chidambaram budget. And yes, after all of this has happened, I am delighted. But no, I cannot say that I'm ecstatic. Now, why? Why am I not ecstatic? Here are 3 reasons. Large Indian companies have never quite paid the peak rate of 35+%. Most utilize a rather welter of complicated exemptions to pay, at best anywhere between 18 to 29% tax on profits. Therefore, if the profit tax has now been cut to about 25%, they could end up saving no more than 2 or 5% of their profits. Now, to put it in perspective, think of a company which is earning about 50,000 crore rupees of pre-tax profits. Now, that company will have an additional rupees 1,000 to 2,500 crore to play with. That's not a piffling sum of money, I concede, but neither is it so revolutionary. 2. Will this ignite a consumption boom? Now, here is where I track away from all this euphoria. The government has chosen to give additional cash to companies, but not directly to consumers. Now, this cash will, of course, ultimately reach ordinary people like you and me, but in a very sort of convoluted way. When companies cut product prices or declare dividends, or they buy back their shares, or they invest in new projects. And of course, there will be leakages along the way. Having said all of this, I still concede that this cascade of cash which is going through the economy deserves applause, deserves to be applauded, even if it's not, a roar or a thunderclap. Point number 3. So, was there a better way of injecting this stimulus? Yes, there was. Imagine if the cash was squirted directly into consumers' pockets, rather than meandering its way to them as I've just described. Now, how could that cash have gone straight into the consumers' pockets? Well, here's how. 1.45 lakh crore would have given a much bigger boost. Imagine if the government, instead of giving more cash to companies, had cut the following taxes, which would have enriched ordinary folk, once again like you and me, directly and immediately. 1. Abolished the 28% GST slab for most key items, including cars. Now, with one stroke, popularly purchased items would have become materially cheaper, 10% cheaper, and that would have kick-started, what's called the virtuous consumption and investment cycle. 2. What if the government had abolished the long-term capital gains tax on equities? Now, this was something that existed before the Modi government slammed a hostile regime on risk capital. Now, if they had done that, if they had abolished long-term capital gains tax this time, in one go, a previous injustice would have gotten undone, and that would have made equities sexy once more. 3. What if they had abolished the dividend distribution tax? Now, this would have killed the hugely unfair double taxation of dividends that exists in India, because dividends are taxed in the hands of the companies, and once again they are clubbed with shareholders' incomes and taxed again. So therefore, if this had been done, investors would have instantly got more cash to spend and more cash to invest. Now, while we could not figure out what the revenue loss would be if these three taxes that I've just spoken about, if these three taxes were cut and not just the corporate tax rate as the government has said, my bet is that the loss would still be in the vicinity of 1.5 lakh crore, give or take a few thousand crores, which is quite immaterial when you are mounting change on this scale. What's more, I can bet my last penny that the consumption and investment impact of these three tax cuts that I've spoken about, the long-term capital gains tax, the dividend distribution tax, and the GST 28% slab, if these had been cut, that would have put cash directly in the hands of ordinary people, once again people like you and me, and that would have created a multiple impact compared to what will eventually be achieved by the current cut in corporate taxes that the government has done. Now, I've bet my last penny. Is any taker for this wager, especially in the Ministry of Finance on Raisina Hill? Take me up. और अगर यही विचार जो मैंने अभी आपके सामने रखे अंग्रेजी में आप हिंदी में सुनना चाहते हैं, तो आप हमारी हिंदी क्विंट की यूट्यूब चैनल पे जाइए और यही वीडियो आपको हिंदी में भी मिलेगा. एंड ऑफ कोर्स यू मस्ट नॉट फॉरगेट टू लाइक, शेयर एंड सब्सक्राइब टू आवर यूट्यूब चैनल राइट नाउ.